Hello, my name is Catherine Walsh. My fellow analysts, Brooke Blankenship, Yu Zhao He, Rundong Liu, Yu Wang, and I would like to welcome you to our Broken Road Reports video presentation of Powell Industries, an electrical equipment manufacturer headquartered in Houston, Texas. Powell is traded on the NASDAQ Stock Exchange under the ticker symbol POWL. Our team predicted a 12-month target stock price of $60, which would create a 14.64% return consistent with Road Report's market perform rating. We will begin the presentation by giving a description of Powell, then discuss some quick facts about what to expect from Powell and hear about its stock performance. After that, we will give a brief overview of the electrical equipment industry and a breakdown of Powell's shareholders. Finally, we will explain the methods we used in our valuation to form our investment thesis. Powell Industries, Inc., founded in 1947 by William E. Powell as a small metal fabrication shop, has become a leading small-cap firm in the industrial electrical equipment industry. Headquartered in Houston, Texas, Powell Industries manufactured a wide range of products until William Powell decided to pursue electrical management systems manufacturing in 1948. The company offered its first 24,000 stocks in 1956, but did not officially go public until 1977. Powell now has several locations in the United States and Canada, as well as a facility in the United Kingdom. Powell comprises two distinct business segments in the industrial sector: electrical power products and process control systems. According to the company's 2012 10-K filing, electrical power products generates approximately 95% of Powell's revenue. Electrical Power Products offers custom-ordered power management solutions that manage electrical power and related equipment. Its main product lines include switchgear, power control rooms, power control modules, and bus duct distribution systems. Process Control Systems provides custom control systems that manage and monitor operations at large, energy-intensive facilities. Powell acknowledges the importance of maintaining its relationships with current customers. The company services and sometimes operates its products for the customers, which results in a consistent revenue stream. Those clients come from a diverse range of industries, including the industrial, utility, and municipal industries. Electrical equipment is produced for low, mid, and high voltage operations, and Powell focuses on mid-voltage equipment. The economic recovery bodes well for the electrical equipment industry. Companies are using the excess cash from monetary easing to upgrade their electrical equipment and infrastructure, and these activities are the driving force behind the electrical equipment industry and Powell's revenue and profit. An increase in electrical equipment demand in the North American industrial industry, which provides customers for over 70% of Powell's operations, presents an opportunity for Powell to further increase revenues. In 2012, Powell acquired two parcels of land to build new production facilities in Houston, Texas, and Edmonton, Canada. The extra costs and difficulties in getting the facilities running properly may limit Powell's revenue in the near future. The long-term benefits of these facilities include ease of shipping products, extra production capacity, and increased efficiency. Powell's future growth depends in part on the availability of capable engineers. As the demand for engineers increases, but the number of available engineers does not, Powell's revenues may not be able to grow, and the timing of the company's projects may change. Powell's stock price has increased 59% in the trailing 12 months because the company had an impressive fiscal year 2012 and beat earnings estimates in quarter one of fiscal year 2013. Growth in the electrical equipment industry and the economic recovery are partially responsible for Powell's fiscal year 2012 success, and we expect these factors to continue to drive Powell's success in the fiscal year 2013. Furthermore, Powell has maintained a strategy of mergers and acquisitions that have helped the company expand international operations. Powell's positioning in international markets should help the company secure more contracts and increase revenue in fiscal year 2013. However, the company's $75 million investment in two newly established facilities will likely reduce earnings per share by 25 cents in fiscal year 2013. The electrical equipment industry is dominated by large corporations. The top four industry leaders, GE, Siemens, Alstom, and Schneider Electric, comprise over 40% of the market. The electrical equipment industry's main drivers are real GDP and capital expenditures. The industry is also sensitive to other macroeconomic factors such as commodity prices, industrial and manufacturing utilization rate, and emerging market growth. In the next 5 years, the electrical equipment industry is expected to experience growth in emerging markets of the Asia Pacific region, and more companies will target those markets. This will create more competition in what is already a highly competitive market due to competitive bid situations that put downward pressure on profit margins because companies have to keep their prices low enough to win contracts. Finally, the innovation of new products is the key to success in the electrical equipment industry. Customers want to buy the newest technology and most up-to-date products available, so those competitors who fail to update their products eventually become obsolete. Powell has 11.9 million shares outstanding as of February 4, 2013. Institutional holdings constitute 71.2% of the total outstanding shares. Many of these institutions began investing in Powell in early 2010 and have increased their Powell holdings gradually. Insider holders constitute another 23% of Powell's outstanding shares. Insider holders had no major transactions in fiscal year 2012. Overall, the steady holdings across all investors indicate that Powell's buyers find consistent value in the stock. According to Bloomberg, Powell's float is 9.2 million shares out of 11.9 million shares outstanding. The company's average trading volume is 46,126. Powell's current short interest is 1.9% of the company's float, and the short interest takes 3.5 days to cover. The little short interest in Powell is an indication that investors believe the company is a good investment and will continue to perform well. To find our 12-month target price for Powell Industries, we use the discounted cash flow method and 4 relative multiples methods: the price to earnings ratio, the price to book value ratio, the enterprise value to EBITDA ratio, and the price to cash flow per share ratio. This valuation allowed us to form the following investment thesis. We expect Powell's stock price to increase by 14.64% from its current price of $52.34 to our 12-month target price of $60. Powell's position as an industry leader in custom electrical equipment and solutions should help drive the company's revenue and profit up as the recovering economy spurs electrical equipment demand worldwide. The company's focus on increasing its international operations provides opportunities for Powell to grow exponentially. As a result, Powell should be able to secure more contracts and continue to earn revenue from its record backlog level. We invite you to view the full version of our report in a PDF on the Birkenroad website. Disclaimer: the Birkenroad reports are produced solely as a part of an educational program at Tulane University A.B. Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment. Thank you.